What's going on, traders? Welcome back to another video. In this one, I'm going to talk about the top-down analysis, which is the most requested topic. So starting with the introduction, actually the top-down analysis mean aligning all the time frames until you get a weighted entry. I have arranged time frame alignment in a manner that you will understand it correctly. So starting with our high time frame, the higher time frame, which is the weekly, daily, and the 4 hour. We are using these time frames for figuring out the direction of the next candle or finding our bias, whether it's a daily bias or a 4 hour bias or a weekly bias. You are looking for the next candle's formation and you are assessing the price section for bullish or bearish. So this is our high time frame, weekly, daily, and 4 hour. Now the intermediate time frame, which is for the structure alignment and finding your swing points. The purpose of this is confirming the structure within the high time frame direction. Like for example, if you are bearish for the day, then you can confirm the structure on the lower time frame, the 4 hour, the 1 hour, the 30-minute, and the 15-minute, and you are checking for the protected swings to trade away from. When you get into the intermediate time frames, ask these questions: is the structure aligning with my high time frame bias? Is the high or the low of the day formed yet, which you can use the daily profile for? And where are we trading towards, which is your drawn liquidity? Now the third is the high time frame swing point to the lower time frame entries, market maker models or T-Trades fractal models. When you already have the bias in the structure, now align it correct to then go to the lower time frame for the entries. So the time frame alignment is the weekly to 4 hour, the daily to 1 hour, the 4 hour to 15-minute, the 1 hour to 5 minute, the 30-minute to 3 minute, the 15-minute to 1 minute, and you are using sometime the daily to 1 hour, and 4 hour is a reference, which I will show you in the next schematic. So here we have the daily candle on the right side. We are having a bullish bias. The 4 hour is supporting the idea, 6 a.m. reversal, 6 a.m. low of the day. The 10 a.m. is going to be an expansion candle. Now when we are going into the New York session, the 8 a.m. is making that opposing run, the 9 a.m. candle is reversing, the 10 a.m. and 11 a.m. is expanding. So that's the idea behind it. And on the lower time frame, you are aligning all these time frames to find your best entry. So aligning the time frame in the same direction is actually the top-down analysis. And now I will go over some examples to simplify it even more. So let's hop into the trading view. So starting with our first example, we are on the NQ and ES daily chart. You can see the Wednesday candle was a reversal candle from this fair value gap, closure inside the range, so we can expect a continuation to the downside, at least to this candle's low and this candle's low right here. And also we are closing below the up close candles. So with that idea, the next candle will be an open high, low close candle. Now, how do we align the time frame to find an entry? So for that, dropping down to the 1 hour chart, the previous candle was a reversal candle. The current candle, we need an open high, low close. We have closed below the series of up close candles. We have a purge on this high right here. This can also be used as a order block, but I'm using the consecutive series of up close candles, which is an order block both on the ES and NQ. We have closed over that. Now we have the idea that the Wednesday was a reversal candle and Thursday is going to be a continuation, but we cannot blindly trade this. We need a structure, the idea of the 4 hour expansion candle. So first we need establish high of the day. That was the first question when you are getting into the trade. Do we have established high of the day? No, we don't have. We cannot trust this high. Now going into the New York session, this is the 8 a.m. open. Do we have a reversal candle? Yes, the 2 a.m. took the previous candle's high and closed inside the range, which is a reversal signature. And another signature for the reversal is putting in the high of the day. So we have series of up close candles followed by closure below. This is change in the state of delivery, confirming the daily profile. 6 a.m. candle has a small wick and it is going to the downside, but we have add 30 news. So I will wait for the 9 a.m. candle. Now with the 9 a.m. candle, once again, we have manipulated the previous candle's high, the 8 a.m. high, but still we have the idea of the expansion because the price is supporting this order block series of up close candles and it is taking the previous candle's high. Now from this point onward, we can drop down to the lower time frame to confirm the structure and get ourselves an entry. So we have a candle to closure, a reversal, and also we are having a small wick inside the 6 a.m. candle, we can expect the next candle, which is the 9 a.m. to 10 a.m. to expand downwards, and we can also expect the 10 a.m. to continue because the daily range is consolidating and this 10 a.m. is only candidate for expansion to the downside. So getting down to the 5-minute chart, down to the 5-minute chart, you can see these are the hourly candles on the right side. We have taken the previous candle's high, which is the 8 a.m. and on the 9 a.m. we are reversing. Now we need a closure below the consecutive series of up-close candles to confirm the change in the state of delivery. Now with this candle, we have closed through the consecutive series of up-close candle, which is suggesting that change in state of delivery. And this high is now a protected high, and we can trade away from that. With that, this is now a propulsion block because the candle is closed over, and we are having a change in state of delivery within the same candle. So I can use this as in my entry and my stop loss above the body highs because the stop loss is too wide in this case, and I can target simply 2R, and here we get barely a 2-hour trade. This was the day before the NFP, which I'm usually not trading because price is ranging, consolidating, and after time it's a seek and destroy. So this was for the sake of this video that aligning the time frame. So if we pull up 4-hour chart on the right side, the 2M reversal, 6M was meant to be an expansion candle, but due to the news it consolidated, and then the 10M opened up, created an order block for opportunity, and then we have expanded to the downside, completing our 2-hour objective at least. So this was the first trade example. Now we will go over some other examples. So here with the second example, we are on the Euro USD and the GBP USD daily chart. On the right side, I have the GBP USD, and on the left side, we have the Euro USD. So from the Wednesday close, we can tell it's a bullish bias because one, we have tapped into this fair value gap, and now we are trending to the upside, and next day model formation continuation. And secondly, we are closing above the consecutive series of down close candle, which is a daily order block. Comparing both the pairs, GBP is looking bullish because it is closing above the highs, and also it is not returning back into the range with the daily candle. So I will choose the GBP USD. Now with this idea in mind, we will drop down to the 1-hour chart to see that established throughout the day to trade away from. Now here on the 1-hour time frame, you can see the daily order block. The price is supporting it, retracing towards that. And on the right side, I have the daily candle both on the GBP and the Euro USD. Now from the open, we have created the wick of the candle, taking this large candle wick and tapping into the daily order block as a point of support. Now all we need is a closure above the down close candle to confirm this is a protected swing to then trade away from this. Now with the next candle, which is the 1900, we have closed above the down close candle, and this is now a protected swing, and we can trade away from that. I will pull up the 4-hour charts on the right side to get an idea of the 4-hour expansion candles. Now I have the 4-hour candles on the right side. The 17 open created the low up there, and we are having SMT divergence at the GBPUSD, which is a stronger pair. Now we cannot trade outside the kill zone, so I would wait for the London session. Here you can see right at the new 4-hour candle open, we are having SMT divergence at this specific swing. The Euro USD is taking this candle slow, and the GBP USD is creating that SMT divergence. SMT divergence is the confirmation of every reversal, every explosive moves and reversal starts within the SMT divergence, but you have to align the SMT with the order flow. You cannot trade the bearish SMTs inside a bullish order flow, and the 1 a.m. candle is going to be the new candle open, so we can expect that to be an open low high close or a bullish expansion candle, keeping that idea in mind. Now the time frame alignment for the 1 hour is 5 minute. I will drop down to the 5-minute chart. Now on the 5-minute time frame, you can see we have SMT divergence. This specific candle also taking a short-term low. In this case, this is a single candle, so we need a closure above this single candle to be the order block. Now with the next candle, we have closed above the down close candle, also the 1 a.m. new candle open. Putting my entry at the reaches, my stop loss below the body lows are the order block low, and I would target 2R, and the price expanded and completed our objective. So this was the top-down analysis. Our daily bias was bullish. We had a 17 reversal. We had a protected swing to trade away from on the 1-hour chart, and all we need is a swing point to then align with the 5-minute entries to get inside with the distribution. So we traded inside the reversal candle. You can also trade the continuation as per the T-Trades fractal model. So here with the third example on the gold daily time frame, on the silver we had a crazy candle expanding downwards, and on the gold we are having a bearish bias because we are taking this short-term high, then creating a bullish candle, and then closing below that bullish candle or the bearish candle. So this is the signature of the order block. So when we have an order block, we can expect the next day to be an open low high close, either retest the order block or just expand downwards. So we have the idea for the downward move, and we have failure swing right here. And on the silvers, we have equal highs and some failure swings to the downside. So we are expecting the Friday's candle to be an open high, low close candle. But for that, we have to confirm that on the lower time frame, the 1 hour and the 4 hour. Now dropping down to the 1 hour time frame, you can see from the open we are consolidating and we have NFP news release on 8:30, so I would wait for that. And one thing more, you can see we are inside a consolidation range. For the bearish continuation, we would want to see an open high low close candle. So we would need the range high to be manipulated and then expansion to the downside. This is also relating to my previous video, which was on the ICT power up 3, which was accumulation, manipulation of the high, and then distribution to the downside. So we will wait for the New York session. So here on the 7M candle, we have manipulated the range high and aggressively closed back into the range. So we can expect the next candle to be an open high low close candle, and pulling the 4 hour candles on the right side, we had 22 and 2M consolidation. And from the 6M candle, we have created the high of the candle, and now we are closed inside the range. So the third candle inside the 6M candle can be an open high low close or bearish expansion candle. Keeping that idea in mind, I will drop down to the 5-minute chart. So here you can see that is that range high, and we have manipulated that. We have a change in the state of delivery with this candle, and all we need is a continuation. From the open of this candle, we are expanding to the downside, but here we have a fair value gap. The price stepped into that and closed over, which is a continuation order block. This is the 8:30 and a fair release, so we would wait for another order block to form. And there you go, we have SMT divergence at this high. The silver is taking that high, and the gold is creating SMT divergence. So this candle can be used as an order block and a protected swing. We can put our stop loss above here and target the range low. We almost got stopped out, but eventually we have head over to our target. This was a top-down analysis. We were aligning the daily candle. We expected it to be an open high low close candle. Then we had an established high of the day inside the New York session, inside the 6M candle. The 10M is going to be a continuation candle, and we traded the third candle inside the 6M, and we traded a continuation order block because there was an FE release which can manipulate the highs. So hopefully this video will help you with the top-down analysis. Thank you guys for watching. Make sure to subscribe to the channel and like the video, and see you in the next one.